Is Orlando affordable anymore? Have interest rates smashed home buyers' hopes of ever buying? In this video, I'm going to break down the numbers on how interest rates are affecting the market and whether there's a path to buying a home in Orlando at all. Hi, I'm Kathy Williams, Team Williams with Compass Florida in Orlando, and we are your relocation experts. Hey, today we are at a 20-year high for mortgage rates. Yes, the last time interest rates were this high was 20 years ago. And in fact, 20 years ago, 7% did not seem that high. I know when I bought my first home in the early 90s and interest rates were in the 8 and 9% range. And even when I bought my second home in 2000, we bought down the interest rate and it was 6.5%. But that doesn't help buyers who are looking right now. Sure, interest rates have been high before. Back in the 70s and early 80s, interest rates were as high as 13 to 14%. But that doesn't help anybody now because the home prices back then were a quarter of the price they are now. So the argument that these rates are not high comparatively to back in the 70s and 80s, that just doesn't help buyers right now. I mean, sure, the 80s were some fun years there. I know I got very caught up in the Olivia Newton-John leg warmers and Madonna's multiple layers of necklaces look. All that was great. But all that nostalgia does not help us today. And you could also say, gosh, just 2 years ago, we were at less than 3% interest rate. Some people I worked with, I know, locked in a 2.5% interest rate. And so we could get a little nostalgic about 2 years ago even, which I hear you 100%. But remember, back at that time, we were also having to bid way over asking price. We were up against multiple offers. We were having to waive inspection, waive appraisal, all kinds of challenges in that market because there was such competition and the buyer demand was so high. So it was really crazy. And you might say, well, those buyers were so lucky because they got to lock in that 2.5% interest rate. And that is true. So now we are looking at higher interest rates and the prices on homes that got run up over the past few years with all the demand. And so, it makes complete sense why so many buyers have stepped out of the market, and the market is slowing down tremendously, not just in Orlando, but all over the United States. Some places have slowed down much more than Orlando. So what do? Buyers right now are facing not only higher home prices, but also higher interest rates. So it's really a double whammy. It's making homes unaffordable in practically every price range. So what is a buyer to do when faced with these obstacles? Let's look at some numbers first, and then let's look at some options that will help you. Does that sound good? I'd like to show you the difference between buying a home at 3.5% and buying a home at 7%. So here's our example. At 7%, a $400,000 home with 5% down, the payment is $2,528. And at the 3.5% rate of about 7 months ago, a $400,000 home, 5% down, your payment is $1,706. That's $800 a month less than you would be paying now. That is a big difference. And you know what else makes a big difference? When you hit the like button and subscribe to my channel. That helps the YouTube algorithms find the people who need to see this info. And let's go back to our discussion. So you say, well, prices are going to drop, so I'm just going to wait. I'm going to wait this out and see what happens. And we have to look at how much home prices would have to come down in order to match an interest rate of 3.5%. And if you do the math, then that $400,000 home would have to come down to around $280,000. And that's just not a realistic idea. The reality of the market, what I'm seeing in the Orlando area is, yes, we have more inventory. We have about 3 months of inventory currently, but it's still not enough inventory to drive the prices down that extreme. In early 2020, we had 3 months of inventory and prices were still climbing. And people are still staying in their homes too because, well, they have this low interest rate and they don't want to leave that low interest rate. And they have tons of equity. So foreclosures are less than 1% of what we're seeing in the market. So I am seeing some downward pressure on the pricing. You do see some price adjustments, and a lot of times that's because, they were slightly overpriced to begin with. You see, when you price a home right now, you can't really use the comps from the past 4 to 5 months. We've always done it that way. We always use the most recent comps, but now you have to also adjust for the downward pricing pressure, and people just haven't gotten used to that yet. So the combination of them being overpriced plus the limited number of buyers in the market right now creates a need to lower the price, and in most cases it's about a 5% decrease. So at this point in time, there would have to be a huge shift in inventory. We would need at least 6 months of inventory, and right now, again, we're at about 3 months. So yes, that's way more than it has been in the past 3 years, but it's still not enough inventory to cause the prices to go down that far. So if you're thinking of moving to Orlando and you want to buy a home, what are your options? Well, I'm going to give you some. One option is to buy down the interest rate on a 30-year fixed rate mortgage. There is a good chance you could negotiate for the seller to pay for your buy down, because right now there's more inventory and homes are sitting on the market, and there's more room for negotiation. It's only around $5,000, so that's not that hard of an ask at this point in time. So sellers are willing to look at giving you credits towards buying down the interest rates, closing costs, different things like that. Secondly, another option that I'm seeing lenders do right now for my clients is what they call a 2-1 buy down, which basically the way this works is the seller contributes to the cost of the buy down. And for example, if the interest rate, just using the interest rate right now of 7%, the first year you would get 5%, the second year you would get 6%, and the third year you would get 7%. So the hope is by the second or third year, the interest rates would be back down at a reasonable place and you could lower your payment by refinancing your loan. Another option is seller financing. So this is one that not a lot of people are talking about, but it is also a really good option. The seller finances at a rate that would be higher than if they were to put the proceeds into a CD. And it's a win-win for both the buyer and the seller, because the buyer is getting a lower rate and the seller is getting a higher rate than they could get on a CD. Now this option, of course, is great for sellers with a lot of equity in the home, and they don't need to buy another home with the equity from the sale of that home. And of course, one other option is adjustable rate mortgages. All of these options have their pros and cons, and you would just need to get to a lender to decide what is the best option for you. I can recommend great lenders to you if you need one. And right now, if you really need to buy a house and you want to buy a house, you want to make the move to Orlando still, it's actually really a good time to negotiate. We can negotiate the terms, we can negotiate closing costs, we can negotiate buying down the interest rate, we can negotiate repairs. These are all things that we have not been able to negotiate for the past 2 years. It's been such a seller's market that none of these were even options that we could do. So now we can negotiate, and my team loves to negotiate. We can definitely make sure you get a great price and great terms. So if you're thinking of moving to Orlando, go ahead and download my free relocation guide. It's in the information box below, and I will see you on the next video. Bye-bye now.